Traders, friends, family from around the world, welcome to the Real Life Trading Podcast, where we discuss and chat with people from all around the world, all different backgrounds, all different organizations and trading experiences and account styles and trading styles. Today, we're interviewing a person who I deem as stock market trading royalty, a pure legend in the field, and someone who's all the way across the world on the opposite side of the globe. So right now it is 7:20 p.m. Central Time, and she is in the Australian time zone. What time is it over there, Louise?
It is 10:20 a.m.
Beautiful, 10:20 a.m. And so again, this is what I love about trading, is it brings people from all around the world in combination with each other. And we were just discussing, Louise and I, using the term synergy and figuring out a way that both of us can help and enrich and pour into all the traders from all around the world and learn this magnificent skill of trading. So Louise, I have your website up in front of us, thetradinggame.com.au. Just tell us a little bit about your background. Like, how did you get involved in trading?
Sure, Jeremy. Look, originally, way back when, I had my first trade when I was 15.
Oh, nice.
So I know, how good was that? So there was this guy who was dating my sister. Look, my sister broke up with him, but I stayed in touch with him. He said to me, there's this IPO, you know, like the original time that this share is ever introduced into the market. He said, it's a sure thing. And I just went, oh my gosh, take my money. I made $5,000 out of that.
Nice.
I was hooked.
Yeah.
I never even usually tell that story, actually, Jeremy. But look, I think sometimes if we know people's origins, it can give us an idea about who they are and their personality. And literally, I was hooked. I didn't trade again up until when I was 20. So in 1990 it was, I'd just finished uni. I'd lost most of my money in Pyramid Building Society, which was a very unfortunate situation. I even had a letter from the government saying that your money is safe, but of course it wasn't safe and it crashed. Now, I took the tiny little bit of money that I had left because I was in debt at uni, just starting working. It was hideous. But I went, oh my gosh, I had a flavour of money from when I was 15. And I took the tiny bit of money and I started trading with it. And I'd love to say it went as well as that first trade.
It never does. Never does.
But it never does. So I didn't know even what a stop loss was. I had only had that glory in my mind of, hey, this is instant money. And I was desperate. I needed to. I'd moved out of home. You know, everything was falling down around my ears. And I needed the market to provide. Now, that was the very wrong way to go about everything. The whole lot. I mean, my mindset was completely screwed. It was not the way to think in a calm, logical, firm fashion about how to be a kick-ass trader. Are we allowed to swear on this?
Bring it.
Oh, good. That's okay. Just making sure we've got that swearing warning out there now. So that's someone at your door, Jeremy. Are you cool with this?
Yep, I'm totally fine.
Good. Let's ignore them and keep talking, because that's what you have to do as a trader, isn't it? Absolutely. If you've got trades on in the market, you have to ignore all of the distractions. So going back to 1990, so I looked down the back of a bank. I saw down the very back of a bank the name of a broker on a little ad. And that person's name, he had the first name of Chris. Now, weirdly, I adore every Chris I've ever met. You may as well be Chris to me, Jeremy. I am married to a Chris Bedford. My business partner is a Chris Tate. My gardener is a Chris. My best girlfriend is Chrissy. Every Chris I've ever met, I've always adored. I saw this broker's name down the back of a bank and I went, hey, here's the one. So I rang him up and I said, Chris, you don't know me. I've got some money. I need to invest it, and I was wondering if you would help me. And he said, sure, I don't know anything about the markets, but let's learn with your money. I thought it was fantastic. I
Yeah.
thought, yeah, he's willing to learn with me. I'm willing to learn. I didn't realize that probably it would have been a good idea to have somebody who knew what they were doing. I didn't realize the importance of a mentor at that stage.
Mm-hmm. Makes
So
sense.
3 years of absolute devastation. I kept on making money from my job and I got promotions, so I put more money into the markets. I didn't think about property at all. I was just so market driven. And it was like a catastrophe after a catastrophe. Jerremy, I know this is probably not all that positive for your listeners so far, is it?
Hey, it's real though.
It'll get better. Okay, it'll
Mm-hmm.
get better. Year 3, I rang up my broker and I said, look, mate, the problem with this is that you are making the money and I am losing the money. And this can't go on. You need to introduce me to somebody who's successful, somebody who's making money consistently, someone I can learn from. And here's the one that's the tricky one, I want a female. All I see is men in the markets and I'm sick of it.
Yes, I'm with
Yes.
you, by the way.
Oh, I used to go down to the Australian Stock Exchange. It was just up the road from my office, and I'd look at the ticker, the ticker with all the share prices going
Yep.
along one by one. And I'd look down a huge long line of men in navy blue suits with red ties, and to my right I'd see a huge long line of men in navy blue suits with red ties. There was no female anywhere. So I made my poor broker find me a woman who was independently successful out of the markets and give me an introduction. Yeah. So for you, Jerremy, did you have anybody that was significant for you that turned that key for you?
That's a great question. I'm glad you brought it up because yes, and it was actually also a lady, and her name, I don't know if you've ever interviewed her, because I know you have a great podcast called Talking Trading. So if you guys ever get a chance, make sure to check that out. I've been on it,
Yeah.
and I can't remember.
Your interviews were fantastic on that,
Oh,
Jerremy. They
thank
were
you.
some of our most successful ever. Talkingtrading.com.au. So go and listen to Jerremy because you love him here, you'll love him there too.
Thank you. And I can't remember, do you know if you've interviewed a Miss Anne-Marie Bain or not?
No, okay. I don't know.
I'll make sure to send you her contact info after this, after we get off the phone.
Fantastic.
But yeah, she was one of my original mentors long time ago. And she was the very first person to ever describe trading in the sense of people. I mean, it makes sense now, but I never thought about it when I was initially doing it. I thought about it as a company. So you buy into companies, right? You buy into a company because of its performance or what it's going to do. And she was the first person that said, hey, if you're trading technicals and you're looking at the chart, what you're doing is you're reading people's emotion. And you can visually identify what people are thinking and seeing if you're good enough at reading the candlesticks. And that was a really big eye opener for me. And that was probably about very close to 10 years ago. And I'm actually going to see her very soon in New York City. We're doing a big conference together. So that's, it's been beautiful how we've stayed in contact over the years. But she really was that person who just kind of put me towards the mindset of, if you're looking at something, what you need to be focusing on is what people are feeling, because it really is people that we're trading. I mean, it's not just companies, but it's people's emotions, people's money, and how all of those things intertwine.
It's so true. And I even think if you think of your life in the form of a share chart. I had one of the members of my mentor program phone me up a little while ago, and he was in debt and he was almost in tears on the phone. He was so upset. And I said to him, look, what you're looking for is a V reversal, but what you're getting is consolidation. You can't expect the V reversal. You have to go from that consolidated base, because whatever you earn from then on and whatever you put away in terms of savings and building your wealth, if you have that consolidation, it will be stronger than a V reversal. For some reason, that turned the key when he thought of his life as a share chart. And I'm thinking of my life as a share chart even now. It's surprising. It's a good way to go. So I think Anne-Marie was definitely onto something. We trade people's perceptions. We trade the people who are willing to put their money where their mouth is, and we back that. So we notice the trend first, then we get involved. And when the trend alters, we run. We absolutely take it and go.
So, Louise, what do you trade? Do you trade the U.S. markets, Australian markets, Forex, bonds, commodities? What's your focus?
I trade the Australian market primarily, but also we have CFDs here, contracts for
Oh,
difference.
yeah.
I know that you guys don't, quite go there, but CFDs, I trade the options market and I trade the US equity market as well. And I dabble in some index options as well. I was trading them very consistently for a few years, but I lost my contact there. So only now when the absolute perfect archetype comes up do I actually place a trade. Yes.
Gotcha. Okay, that makes a lot of sense. So here's a cool question I have for you because on your website, the trading game or trading
It's just
game.com.
trading game.
Yep.
Yeah, that's it.
So it,
Tradinggame.com.au.
it mentions Trading Mentor, and I would love to ask this question to you as someone who's been in this environment a lot longer than I have. When you mentioned earlier, you took your very first trade, your first IPO trade, and it made you money. Why do you think beginner's luck is a thing? And if so, what is it?
I do think it is a thing, but the unfortunate aspect to this, Jeremy, is the people who often make money, a lot of money in the beginning, they quit. They quit really quickly because they haven't
Mm,
got those resilience aspects to their personality firing. The best traders that I've trained, and I have got so many traders that I've trained, now I'm the best-selling author of 4 books on the markets. I've got a mentor program that I've been running consistently for the past 19 years. And
wow.
because I know, it's just like who would know when I actually look only 20.
That's what I was gonna say, man. How old are you
Oh,
gonna
thank you. But now that we've got such a big community of people, because it's a repeat for free course, so a lot of the people that we trained, 19 years ago are still hanging out with us. So that was kind of a handy thing. We didn't realize we'd be creating such a firm community, is seeing how these people have been trained and when they come out and looking at their success, the people who came out of the mentor program into a huge bull run, actually, longer term, they haven't lasted as well as the people who had to struggle.
Mm-hmm.
Now,
Yep.
isn't it interesting that sometimes it's like a muscle? You go to the gym. You have to break those muscle fibers. You have to create that lactic acid in your muscle. It has to hurt because otherwise that muscle won't get bigger. Now, you'd think that that's just for muscles, but no, it can actually be applied to the markets as well. If you're not feeling it on some level, if you're not introspectively learning and going, heck, what did I do wrong and what can I do differently next time? If you don't have that level of lactic acid and pain buildup in your trading muscle mindset, I think you're probably not going to end up as strong as somebody who's had a few knocks.
Wow. Okay. Well, I mean, it makes sense though. It makes sense. The pain. I mean, I love that pain's a great teacher, right?
It is. It is. And there's a few types of pain. If you talk to Alexander Elder, who you may know, Alexander Elder is, of course, the best-selling author
Mm-hmm.
in your country. One of the things that he said to me over dinner at one stage is he said that there are 2 types of bites in the market. You have your shark bite, which is one bite, bang, you're dead. And you have your piranha bite, which is lots of nip, 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 and eventually you die. Now, if you
Huh.
think of that shark bite in because I've got a psychology degree, so everybody, once they hear that, they go, oh, can you read my mind? It's nothing to do with that. It's understanding how people tick. And psychologists call that shark bite one trial learning. Now, one trial learning is an event that's so big, so catastrophic, so devastating that you will never, ever repeat that action. Now,
Interesting.
so like for my little boy, like when my little boy, he's 16 now, so he's not little, but when he was about 3 years old, he disobeyed me. He tried to run across the road. Chris Tate, my big, bald, 6'4" business partner, turned around, screamed at this kid in his face. So the kid's hair blew back. He curling into the fetal position on the ground because Chris Tate yelled at him. God, I think I would too if Chris Tate yelled at me. But you know what? He never ran across the road again.
Yep.
He had serious one trial learning in the form of my business partner, Chris Tate. And when my daughter came along, she tried the same trick. My son screamed at her. She had one trial learning passed on from my son, which was really interesting. And both of the kids have great road sense now. They're much older now. They're, 11 and 16.
Totally, yeah.
But the whole one trial learning for trading is really important here because we don't want to suffer that shark bite. You don't want to lose 50% of your account because it takes 100% to get back to break even. So you have to do everything in your power to avoid that one trial learning. It's fine to have piranha bites. We can course correct with piranha bites. You get little loss, little loss, little loss. You can course correct on that. You suffer a shark bite and you can't course correct. You may not have enough time in your life to course correct because not everybody's 31. Not everybody.
Yeah, that's true. That's true. I mean, it's most of my listeners are actually older, and that's at least older than 31. And I think you're totally correct. The challenge that takes, and I talk to a lot of traders regarding the whole mentorship thing. I talk to a lot of traders about when is a good time to at least reach out for help. And my thought process is, I think traders should have two levels in their account. Like one level where they're like, okay, this is where I have, a soft stop and I reach out for help. And this is where I have like an absolute hard stop. I don't go below this particular price point. And I really just take a giant step away from the markets, from trading, and just really pour over my results. Because a lot of people will go out, let's say with $25,000, $30,000, $40,000, and they'll lose 10 before they reach out to anybody. And my thoughts are always like, well, man, why don't you spend 3 and then lose 7 and it's the same thing? Like go through an actual process and have someone kind of hold your hand and help you and see over your shoulders. Like it's just the smarter thing to do. And I do that in all of my business dealings of any kind. Is I automatically assume I'm an absolute idiot. And so I go, who's someone who's better at this than I am? And I'm just going to pay them to give me the shortest distance to the goal, because it's always scary spending money. And it's always scary buying something that costs a lot. But if you can do the analysis and visually identify, you should probably take that experience from someone who's been there, because you don't want to go through those life-altering or those giant shark bites, as you mentioned, because it does take, in my experience doing it, going through that and losing all that money, it takes 3 to 4 times longer than however it is that you lost that money to get it back. So if you lost that money in a year, it's going to take at least 4 years to even come back to break even.
I love your thoughts there. There's so much. I want to pick up on a few points. Firstly, I love the idea where you're assuming you're an idiot, because that shows a complete lack of ego.
Yeah.
The thing that we all have to fight against is ego. And even my very first editor, I'm popped onto Wiley's list, the second largest publisher in the world. So they have seen a lot of traders and a lot of people write books, and they've heard what's happened to them afterwards. My very first editor said, be careful after your first book comes out, because she said it can go one of 2 ways. Either you'll believe your own press and you'll go, hey, I'm fantastic, and you'll crash in the markets. Your own trading will suffer. Or you'll realize how little you know because, hey, you've only just touched on this subject, and your trading will improve. And you know what? When your book comes out, I'm going to love to see when Money Grows on Trees actually explodes into the trading blogosphere and people are talking about it left, right, and center, Jerremy. You know what? Heed my warning with that. Heed my warning.
I will heed your warning. I think that's great advice, because there is a rule that I have in my trading plan. And again, I'm hovering over your website now talking about the trading pack. So if you guys ever want to get some information on how to create a trading plan and maybe I'm going to do that as well so I can get mine and look through it and see how you're
Yeah, get that
mine.
trading plan template. That trading
Yeah.
plan template I give away for free to save people from those shark bites, because it's so important that we protect our capital. Yeah.
Yeah, I'm gonna do it right now because I'd love to know what it looks like because I also really, really believe in the power of a trading plan. And mine's pretty specific and I have a lot of really fun rules, but one of those rules that protects me from myself, I have two. One of them is if I am profitable across all of my swing trades at once. So a swing trade would be any trade that's, more than a day. So not a day trade, but specifically not an investment. So this is not something I'm in long term. I'm looking to make bill paying money within 30 days or less on this trade. So it's a swing trade. And if I'm in that trade and I'm profitable across all of them, which is usually 6 or 7 at once, max, that's the most exposure I'll take, is about 7 trades. If I'm up on every single one of them, I just get out of everything immediately. Because anytime my eyes see all green in my account, your brain starts messing
Mm.
with you, man. Your brain goes, oh, dude, you're the greatest trader of all time. You're about to
Mm.
make so much money. And as soon as that's one of my other rules, if I ever say that out loud, or I text it to somebody, or I mention it in passing, if I ever verbally say, I'm the greatest trader, and then follow it with anything, I immediately go and just close every position. If it's crypto, if it's a futures, if it's a stocks and options trade, if it's anything short term, I just get out of that position immediately because that is a true recipe for the market's about to humble you because it knows. It somehow knows.
Yeah.
It does it for everyone too. Experience it yourself where you're on top
Oh,
of the
yeah.
world, you're making 40 grand in a day or a week or whatever, and you're just crushing it. And then the market's like, nah, bro, good try. And it just totally
Completely. I had a series of absolute amazing option trades, 9 in a row, bang, 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 all on the same instrument. And then, of course, my biggest ever loss was straight after that.
No way.
So,
Oh,
yeah,
tell me about it. That
yeah,
sounds amazing.
yeah.
What was
Talk
it?
about my own personal volatility. We're going up. Oh, no, we're going down.
Yes.
Now, I'm going to have to ask you a few questions about this. So I'm just going to leap into mentoring mode here, Jeremy, because I want to make sure that that is a good decision. Now, you can play the devil's advocate with me too, but
Oh, sounds good.
I'm going to play it with you currently.
Yep.
What about clustering? Because the thing is, I've noticed that when you're good, you get better and better. When you're down, you get worse and worse, unless you've got some specific risk management policies in place to stop that. Now, I know that idea about worried about your ego. I hear where you're coming from.
Mm-hmm.
Don't get me wrong.
Mm-hmm.
But what about the clustering effect of money makes money?
Very good point. And so my thought process on that is it's very similar to very similar to poker or poker in me is the closest thing to not gambling as the stock market is, where
Mm,
at some point when you take a trade, the only difference between gambling and investing is when that final card comes out and you're wrong. In the stock market, you can lose as little or as much money as you want, but you can pull your money out. In
mm,
gambling, that final card comes out, it's all gone. The reason I'm bringing it up is I actually do like playing poker, although I'm not that great at it. I do like playing. And in the sense of money, the more money you have, the faster you're going to make money, number one. Number two, when people say, hey, I want to become a millionaire in the market, we better be trading with $1 million because that's how
mm,
you're going to make $1 million in the stock market is you're going to need millions. Millions makes millions. Thousands very, very rarely turns into millions unless it's a long period of time and you do a lot of very, very specific critiqued trade entries and trade approaches. And it's just going to be over a long time horizon. So for me, it's kind of about stacking the odds and the probabilities of how often am I going to be right continuously. So for example, if I go on a 6 or 7 trade win streak, I know that a losing trade has to be around the corner. So for me, I personally just take it, lock it in, be done, and then go find that next losing trade or approach it as a potential loser, expecting it to be a loser. So that if it does occur, I go, cool, I was right. The loss actually happened. I fulfilled that need of certainty. And then I go and I continue to take more trades after that. So you can definitely grow that perspective trading account in that form and fashion. But the big challenge for me is I've never had that opportunity, or at least I've never seen it in my trading, where I just keep getting better. I think it could be a personality trait as well. Maybe it's a mental block that I have. And I know that each person will be different. But for me, I very rarely am just like, bam, oh, it's better, it's better, it's better, it's better, and just continually grows.
Yeah. Yeah,
Because
you
at
have to
some
go
point it's
through
going to happen.
drawdown somehow. You have to go through drawdown
Have
somehow.
to.
And when you're counting the money that you're making in the trade, so the trade hasn't closed out, it's an
Yep.
active trade,
Yep.
you're looking to see how much money you've made. Do you look at it in dollar terms or percentage?
Great question. A little bit of both, but in a different flavor. So I don't look at it in percentage, because the way I personally trade is I use what's referred to as the R method. R method
Yeah, I know.
is, yeah, you're familiar with it. So
Yep.
when I'm looking at it is I look at it in terms of how much risk that I put on to take that trade rather than a percentage. So for example, I can trade, I'm going to trade on Chiadin, which is ticker symbol QD. It's a stock on the New York Stock Exchange. And it's a very inexpensive stock. It's like $7 a share right now, $6.96. So it moves. It can move like 5 or 6% per day. But I'm not going to make or lose 5 to 6% on my overall portfolio because of that stock. I'm only going to lose or make 1 or 2% based on my portfolio risk across the board. So I actually look at everything as fractions of what is my risk on a particular trade.
That's fantastic. That's really good. In fact, that's what I was going to suggest you do. So we are so on the same page. And
I know we are, girl.
and what about when you're making losses? Let's flip this.
Let's flip
What
it.
about when you're making losses? So what sort of protection have you built in for yourself when you're making losses?
Great question. And I can answer that very easily, because losses is something that we have to embrace. And when I tell people that, when I work with them and when I coach with them as well, just like you do, one of the fun parts that I love to bring up is, guess what, my friend? You're about to experience something that you've never experienced before in your life, which is loving to lose. Become a great loser. Learn to accept it, because it's going to happen every single day, or at least once a week or once a month. Like, there's no way you're going to make winning trades all the time. Like, you will be wrong. Your analysis will be wrong on trades in the market. You're just going to lose. So you have to accept the fact that you're going to lose. And whatever sports athlete or mentor or business person or entrepreneur or famous author that you want to look up to, they all describe losing and failing as two different things. I don't personally believe in participation trophies. So like, if if you have children and they play a sport and they lose, hey man, let them lose.
Yeah,
Like,
let them feel it.
let them
Yeah.
feel the burn. Losing
Yeah.
and failing are two different things. Like, losing is we just have to accept that in life. And one thing that I find very interesting is we're taught from our entire, in our entire lives through schools and universities and whatever, that being wrong and losing is kind of, a bad thing. You can't score bad on your test. You can't have this kind of mark. If I got a 50% on any of my tests in school, I would have failed that class. However, I come back to this spelling bee analogy, and I will answer your question, I promise. I come back to the spelling bee analogy, where if two people stand up and they say, all right, spell the word cat. One person says C-A-T and one person says K-A-T. The person that says K-A-T is going to be wrong. However, if you go to a dictionary and you look up the word cat, most of the time it's spelled phonetically K-A-T. So in fact, the K-A-T spelling is almost better, one could argue, than C-A-T, but yet it's viewed as wrong. And so people will always be punished for being wrong as they grow up throughout life. And so they're not used to being in this environment of constant losses. So the way that I protect myself is I have some very specific rules for how many trades I can be in at once, and how much losses I can accept in any given day, week, or month. So the max amount I can lose in a day is 3%. That is 3% of brand new trades. The max I can lose in a day over my entire portfolio is 5%. or
Hey, that
5%.
matches mine. So
No
we're talking
way.
about portfolio heat. Portfolio heat is exactly that concept. So what you do is you have a look for the people who aren't familiar with it. So we make sure that we're talking exactly the same language here. Is we have a look at all of our trades, and let's say we're risking 1%, which is our risk. So on $100,000, you're prepared to lose $1,000 on
Yep.
this particular trade. And we're not up to break even with that trade yet. But once it goes past break even, then that all frees up. So before it hits break even, you could lose 1%. We add up all of those trades where we are at risk prior to break even. So it's only 5 trades if we're risking 1% per trade, and that's the maximum we're prepared to lose. So we're not allowed to open another trade until one of those trades has moved beyond break even. That frees up a risk percentage, 1%. We can use that new 1% in a new
Bingo.
position. Hey,
Bingo.
we are so on the same
I
wavelength with
love
that. I'm
this.
loving it.
Me too. And so that's pretty much what it is like you mentioned, I have a very specific amount of, hey, if I start hitting this, then this is what I do. And the worst, oh my gosh, the worst thing is when it happens on a Friday, because
Yeah.
which is, it's happened so many times over the last, like, whatever, 7 years, is on a Friday, I'll hit my max loss for the day, and I just have to go into the weekend with my tail tucked between my legs. But normally what I do is, instead of just crying about it, I mean, I do cry, but like a grown man, like it's okay.
In a manly
like
way.
a
Yeah.
manly weep. Yeah, exactly. Is I go back and I look at those trades and I still go, all right, what could I have done a little bit differently? And I focus purely on those things that I did wrong on those trades. I then use that exact thing that I did wrong for the next few trades. And if I ever hit 9 losses in a row or more, because at some point when I start losing, like, let's say I start losing 3 or 4 trades in a row, I'm going to get more and more and more aggressive with my exits. So instead of losing 1%, I'm going to lose 0.5%. Meaning I'll still risk the 1% initially, but then if it goes in my favor even a little bit, I'll start moving my stop up, or I'll start with wider stops. I'll do anything I can to just slowly stop the burn so that I don't lose 9% over a certain time period. But let's say I do. 9 trades in a row is when I invoke my trading rules for a losing streak. So if I have 9 losing trades in a row, doesn't matter how much the percentage is, but let's just say it's 1% on each trade, so 9%. I'm down 9% over whatever time frame. It would technically have to be 2.5 weeks, because I can't lose, right, more than 5% in a week. So it has to be over, at least that time frame. So let's say it's 9 trades, 1% every single trade for 2 weeks. I just can't hang out. I go and I remind myself, number one, that money is everywhere. So I go and I take some money from my bank account, even though I don't want to, and I donate it. I either give it to a charity or a homeless person, or I give it to as a really nice tip to a waiter, or I give that money away just to remind my brain, hey man, money grows on trees. Don't worry about it. You can go get more. And then I go to the gym and I work out until I puke. That's number 2. So I lose the fear of whatever is holding me back, and I just go to the gym and I truly work out until I actually throw up. Then number 3 is I review every trade that I took, and I review it on every time frame possible to determine if I would have taken that same trade. So I go 1-minute chart, 2-minute chart, 3-minute chart, 5-minute chart, 10-minute chart, 15-minute chart, 30-minute chart, hourly chart, daily chart, literally every single time frame, those major time frames. I go through them and I practice it over and over and over, 10 times each. So this is a whole weekend process. So it takes time. And I'm there and I'm reviewing what I've done and what I do. And then the 4th thing is I do not change my strategy. Meaning I don't just go, you know what, from here on out, I'm now a scalper or whatever.
Yeah.
I don't change everything, because if you change everything, it's usually the exact moment that you change is when the market's like, I got that person. And then it starts working again.
I completely agree. Actually, I'm going to bring out a couple of things here.
Okay.
Firstly, one of the things that I loved you saying is you have if then. Now, I just want to draw in on these two words. So you said, if this happens, then this happens. And actually, that's an essential part of everybody's trading plan. If I get this many losses in a row, or if I draw down by 25%, if whatever horrible occurrence occurs here, right? So if, then, and you pre-consider a solution. So that is part of the weight loss industry's great successes. That's what they tell us they do. If the evil donut bringer hands around donuts in the office, then I will make eye contact and not look at the donut and smile at them and wave them away. Thank you, but no thank you. If this happens, then that happens. So I'm loving that you've got an if-then statement built into the way you handle losses. That's so essential. So for everybody listening, if you don't have an if-then statement, add one into your plan. It's the easiest way. And it's based on a piece of research called a pre-mortem. Now, I don't know if you're familiar with that term. Have you heard that one, Jeremy?
No, tell me.
This one's a winner. You're going to love it. There's a direct applicability for traders. But the background was that the researchers had a look to see about people who were collaborating in a group where the group's end outcome, the end result, went very well or it went very badly. And they tried to work out, how did these groups perform? Why did that outcome occur? And what they looked at is they looked at then adding the variable of getting that group before they've started any collaboration to say it's 1 year in advance. Whatever you were working on has fouled up. It's disastrous. It's gone worse than you could have ever have imagined. They get them to assume the worst case scenario. And then what they do is they get each of the group members to write down, why did this happen and what could we have done to overcome it? So they look in advance, they think the worst case scenario, the thing they were dreading has happened, and then they work backward and say, what could we have done? Now, I've got to say, when I was planning talkingtrading.com.au, our podcast, Caroline, me, Chris Tate, my business partner, and Caroline's partner, we all sat down, we pre-mortemed Talking Trading. And weirdly, exactly what we thought was going to go wrong did go wrong, but we had solutions because we'd already pre-thought it out. So, yeah, it's a winner of a technique, and I probably am overusing this for everything. I'm seeing disasters, you know.
Well, I mean, it's
a good one, isn't it?
It's so
good. It's a really
yes.
good one. So for everybody who's listening, if you're thinking of quitting your job, if you're thinking of, hey, I'm going to tell that boss to shove it tomorrow, before you do that, imagine a year in advance, what advice would your future self have for your current self? Put yourself 5 years in advance. What would that very wise 5-year-older Jeremy tell the current you now? What are the minefields that you could avoid, the pitfalls that you could totally step over if only you had that future self whispering in your ear? And I think every trader should do this. It's a very blatantly horrifying example as to how we can use our imagination to get the best possible result.
Wow. Yes, I could not agree more. And that's something that I talk about a lot when I never had the name of it, but when we're just planning on doing something big, just come up with worst case scenario. Like, what is it? Like, what is the worst case scenario, especially if you're a full-time trader or you want to trade full-time? Because trading full-time might mean that you no longer have your job, or it might mean that you quit your company, or you stop being employed or whatever. But the thing is, you've got to realize a lot of people make fun of or talk down on traders or mentors or coaches from the stock market because they're like, oh, they just want to get more money from us, whatever. It's like, listen, guys, it's all about separate, multiple streams of income. You can never and should never rely on just one stream of income, because it will help you become more confident in your choices. So when you are trading full time and you quit your job or or retired, look and find out, what are you doing when the market's closed? You know, the market's a phenomenal way to generate cash. I mean, I love it. It's incredible, but there's also other ways to make money out there. You know, real estate,
Yes.
online companies or whatever.
And there might even be the opportunity to not actually quit your job completely. I always suggest people phase out. You know, you don't have to be a black and white binary person with this. There may be part-time opportunities. There could be ways that you can investigate exploring an opportunity outside your job alongside trading, and that opportunity can do so well for your retirement. I think we get so caught into that perhaps more traditional, dare I say, old-fashioned way of thinking. Yeah. You know, we have to be a doctor, a lawyer, an accountant, otherwise we're not going to be successful. You know, it's really not the way. Even to this day, my mother talks about my sister, the nurse. She talks about my other sister, who's a lawyer. And when people ask about me, it's almost like she doesn't know what to say. It's like, oh yeah, that one. Yeah, she's done. Yeah. We don't talk about her much. Yeah.
That's so great.
Because people don't know how to define our role.
Oh man.
You know, we don't have that set title that is on our nameplate on our desk. We don't get to have that business card to hand over. That's transition with identity, I think, is as much of an issue for people coming out of a full-time job, trading full-time as their next step, as it is actually generating the income. That mindset of who am I at my core. You know, to live the life of a trader, you have to identify as a trader. You have to have that mindset that says money does grow on trees. I can take it for my very own, and not stop yourself from actually achieving that.
Oh man, so I know you're married, but I'm over here falling in love in the US. You've got a family.
It's a long way in between.
Yes, thank you. I mean, that is, so I know for sure right now we could easily talk for another like 7 hours, but we're not. I know you have things to do, and I want to give your listeners just these tidbits of time, and my listeners these tidbits of time. And I'm sure I'm going to have you back. Let's just do another 5 or 6 more minutes. But what I love that you just mentioned is that whole phasing out thing. People don't even think about that sometimes. Like flex time. They'll automatically assume, oh, no, man, my company and my job, they'll never allow me to trade from home. And then I'll ask, well, I mean, have you ever asked that question? And they go, well, no, I'm just assuming that they're not going to. I'm like, well, maybe, but if you're part-time, or let's say you're working 10 hours a week or something, and you're purely from your home office, why don't you just ask? Because if you don't ask, it certainly will not happen, right? But the universe only gives you what you ask of it. So if you want to trade full time, you're correct. You don't just have to quit your whole job cold turkey. Just scale back a little bit. Take a whole month of unpaid time off if you want. That's something that I did when I worked at an insurance company, and they had never done that before. They had I went to them and asked for a month of month off, and they're like, well, you don't have that much paid time leave. And I was like, no. You don't have to pay me. I just want to leave and be back, and I want my job to be here when I get back. So they did. They made me sign something that said I promised that I would come back to work after that.
Yeah, so you didn't leave them in the lurch, because you have to have that honor and integrity too. Like, I never like people trading on company time, because that's actually not something that's honorable. Like, if you're going to take half an hour out of your day to trade, you'd better add that half hour back on if you're paid by the clock.
Yes. That's a really interesting point that I don't think I've talked that much about. And I really like your viewpoint on that, because for me, when I was at work, and for a lot of people, I often asked, how efficient are you at work really? I mean, imagine you're working 100% Louise Bedford. Like, are you 100% of your time and commitment and your focus right now? Or do you have your phone in your hand, you're looking at Twitter, you got a trading screen over here on the right, you're kind of dabbling at work? It's like, realistically, you'd probably get paid more and could leave faster if you just showed up and kicked ass, like 100%, 4 hours,
bet.
And you just drink water. You didn't go to the bathroom. You just sat there and worked like an animal for 4 hours. You'd probably finish your job and you could leave early. And then you could go trade at home.
Yeah, I love it. And it's also being very careful with your time integrity, because it's not just integrity with your word as your bond. It's your time integrity. If your brain notices that you are just wasting time, it goes, hey, that's okay. That's acceptable behavior. I will continue to do that. Whereas if you don't give your brain that ability to see that you are defying that whole, I'm going to be very careful with my time and I'm going to be the most effective person in the time I have available, then it will go, this is life. I have to be productive every moment I'm awake.
Snap. Blow my mind over here. Yeah, that's a really, really good point. And I think we do have to train our brain. We have to train our mind to understand that the things that we create and the things that we think about and the things that we do and the situations that we put ourselves in will define our future. It just happens that way. And that's why the whole like fake it till you make it thing. It's like, you just got to put yourself in that situation and just try it and really focus and come up with an exact plan, an exact measurement. Going back to trading for a moment, like you're talking about the whole time efficiency thing, I vastly think that people should figure out ways to make 2 or 3 hours in the market work for them, because a lot of people do spend way too much time in front of the charts, in front of the screens.
And you get burnout, you get fatigued, and you can't see patterns.
Easily. And you just get so burned out. And the charts will be there. The market will be there. I promise you the market will open tomorrow. So when we're dealing with that, it's like you have to understand that you can only make so many decisions in a day accurately. Give your brain, and start training your brain to view the market as a phenomenal way for 2 or 3 hours to go in, generate some cash flow, beat some people, beat some robots, beat some banks, beat some hedge funds, beat some mutual funds, whoever you're beating, whatever game you're playing, whatever small crumble of the pie that you're taking for yourself that day. Take it and do amazing things with that money. Use it as an incredible tool, and understand that your time is still your most valuable asset. If you just sit in front of the screen all day, just trading all day, every day, it's going to give you some burnout.
Jerremy, this has been my favorite podcast interview ever. What a pleasure it has been. It has been so much fun. I'm so glad that we are on the same page, and I'm really appreciative that you were allowing me to tackle you on some of these issues, because I know it was supposed to be an interview for me, but I got curious about what you do. So I do appreciate with okay, I'm going to put you under the spotlight now. So exceptional. I'm loving it. I'm really looking forward to reading your book. So I hear it's also coming out in an audio version. So Money Grows on Trees. So are you doing the audio?
I am. I'll be doing the actual audio book. Yep, I'll be doing it.
Oh my gosh, I'm so going to get the audio version. I can't wait. My books, the books that I've written, because they've got so many charts in them, yours is more on the psychology of the markets. It's designed to give you that abundance mindset, to make sure that you're seeing money where there was no money before. And I love that. It does loan itself to audio. My books, I've got quite a few, but they've all got heaps of charts in them. There's trading secrets, charting secrets, the secret of candlestick charting. We've got let the trade win slow, and the secret of writing options. So there are quite a few there. None of them are on audio. So you're going somewhere where I have never trod before.
Which means I'm going to challenge you to do at least one of those in audio somehow.
I don't know. Can I describe a chart? Oh, here we go.
Yeah, we'll see. I think you can. The way you so eloquently speak, I would assume that you can describe anything.
I'm going to take that compliment. Thank you very
much. I love it. I actually do have your the trading secrets, killer trading strategies to beat the market and finally achieve the success you deserve. I mean, I'm going to unfortunately say I've never read any of your books, and I didn't know how many books you had until this exact second in time. And I'm going to read all of them. I'm so fired up. Good. Oh man, I am pumped up. This is so great.
Well, let's go and trade, hey?
Yes, let's do that. And the other thing too is I got to figure out a way on how I get to Australia and hang out with you. And you with Caroline, is she a business partner as well, or just a friend, or?
Caroline's first and foremost a friend, but we've popped her in charge of running talkingtrading.com.au, our podcast, because she is a financial journalist. So It's fascinating how when you've got this type of lifestyle, I don't have an office with a water cooler where I can go and chat with people. We've got to make sure that we do look after our social side. So Carolyn and I talking about the markets, and I went, oh my God, we have to design this podcast just for you. So we designed it completely around Caroline's strengths with interviewing, strengths with being just such a lovely, caring, warm person, so that we could also have another aspect to our friendship. So it's several layers in there, all wrapped up into one. I think we're on episode, I think it's 272, something like that. So, yeah, very, very well established now. I'm sure your people would love it. In fact, many of my people have come over to you from your interviews on Talking Trading. So that has been great to see.
Yes, and thank you again. Thank you for your time, because I'm going to echo your sentiments. I really did enjoy this hour chat. It's been an absolute honor for me to speak with you. So thank you for that, and thank you for allowing me to be part of your inner circle and work with you in the future on things that we're going to do for the world. It's going to be incredible.
Great stuff, Jerremy.
All right. Thank you so much.